Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. How's it going, Ben?
Well, I'm doing well. How are you, Will?
Doing pretty well. It's been it's a little bit rainy and gloomy here in central Ohio, which I welcome. I like a little break from the sun every now and again. But
Sure.
heard you're
Yeah.
getting some windstorms over there in Columbia,
We had
Missouri.
a little wind. We had some wind over the weekend. Quite a few trees down in different places of the state, but I think I haven't heard any of broad, injuries or anything like that, just some power outages here and there. So, however, Will, I have to change the subject. I don't know if we can start our show today without talking about Taylor Swift at the Chiefs game. Every news outlet this morning, as I woke up and was drinking my morning coffee, every news outlet was talking about Taylor Swift at the Chiefs game this weekend.
See, what's already starting to get to me is all the puns that are in the ESPN and general NFL broadcasts and whatever else. I think there's one where they're saying that, oh, Kelsey found a blank space in the end zone. How many song puns can we work in there? So
Oh, this is great.
yeah, it'll. I'm sure you're smiling from ear to ear just watching and listening to all that.
Oh yeah,
Yeah.
it's great. I'm a big Chiefs fan,
Yeah.
so it works.
All right. Well, looking into the markets here, quick recap for December corn. We're up 10 cents on the week at 481. November 23 soybeans are down 19 cents at 12.97. Soybean oil for October down 3.64 cents at 58.75. That's cents per pound there. Soybean meal for October by the short ton up $1.60 at $392. The December 23 wheat crop is down 2 cents at 5.89. July wheat for the 2024 year up 3 cents at 6.43. So things really holding fairly steady there. Looking at that November crude oil contract up 36 cents a barrel at 89.62. So Ben, really not too much of a change from last week. What's your takeaway here?
Well, exactly that. I think not a lot of big changes. If we look at that December corn contract there, we've largely traded in a 25-cent trading range between 4.75 and $5 now for 2 solid months. And at some point, we'll see the market break out of that channel, whether it's up or down. It's yet to be determined. But we've largely been trading in a sideways market here for 2 months.
So, Ben, we're starting to gain some traction on the U.S. harvest front. Looking at the corn side, up to 15% of the way already done. U.S. Soybean harvest, 12% done. And conditions have been, kind of mixed, a little bit of slight improvement here, slight loss there. So really, as we're moving through harvest, maybe is some of that signal on the market's not budging much, just kind of holding and watching what harvest looks like.
Sure, and we are seeing harvest pick up some. U.S. corn harvest now 15% done. We're seeing some of those eastern corn belt states where we expect to see some good production, a little bit slower behind the pace than we normally see for harvest. We'll talk maybe more about that when it gets to wheat, because I think that's a bigger story maybe on the soft red winter wheat market. Probably what was most notable to me in this week's crop progress report was we actually saw a pretty large, well, a gain. Let's just put it that way. We saw a gain of size in that corn conditions rating to the upside. Okay, so we did get some precipitation this weekend. If we were in July, I would say that's scouts out there saying, hey, this is really good for the corn crop, and we're going to see some better yields, and so let's give the corn a little bit better of score. At this point in the year, when we're sitting here on the doorstep of October, those precipitation events don't have a huge impact, especially on corn yield at this point of the year. But maybe what I'm seeing here out of this, increase in condition scores is actually some yield monitor data starting to come in the minds of crop scouts, or at least those reporters that report to USDA. Hearing what some of these fields that they've been looking at all summer are actually bringing in terms of yield, and being a little bit more optimistic, or maybe less pessimistic. Maybe that's a better way of saying it. Is when we look at certain states, those corn conditions ratings increased. Illinois and Iowa being the two with the most notable increases. Those are two states where, if you remember, last year at this time, those were the two states where we got the biggest surprise in corn yield to the upside. So, not saying we're going to see that big of a surprise this year in the corn yield, but again, maybe it's some yield monitor data coming into the fold here.
So Ben, you teased the wheat side of the market as well, and we're seeing wheat planting progress, but a little bit slower than last year's pace. What's your thoughts so far on where we're at, 26% of the way into the wheat planted?
Sure. So winter wheat conditions, yeah, 26%, as you mentioned. The biggest part of winter wheat production is in Kansas and Oklahoma. Kansas a little ahead of pace, Oklahoma a little behind pace. But really, what I kind of was trying to tease here is that Eastern Corn Belt, where we're seeing corn and soybean harvest delayed this year, also very much delayed in terms of winter wheat planting. The reason that's noticeable is that's our primary soft red winter wheat growing areas, an area that saw large production this year, record production in many states that grow soft red winter wheat. A little bit slow this year to get started. Does that have an impact or potentially allow for some soft red winter wheat market, that Chicago contract, to maybe gain a little bit on some of the other wheat markets?
Well, Ben, pivoting a little bit to international production here. We've had some private estimates looking at Ukraine that's bumped up some of their grain estimates there. Not by a crazy amount, but by a substantial amount at the very least. So what are your thoughts on the global market as we see maybe a bigger crop out of Ukraine than we thought?
Sure. Yeah, this is something that is notable for us at this time of the year. Ukraine is also harvesting, getting some of their production, into the fold to maybe be exportable. Largely what we've seen out of the conflict or the war is it really hasn't impeded Russia wheat exports, and that has allowed wheat to continue to flow into the global marketplace. Now we've got Ukraine with production. As I look at their exports over the last month, wheat exports were revised slightly up to 12.5 million bushels. Corn exports up to 19 million. Sorry, 12.5 million metric tons. I always forget in the international market, I got to talk about million metric tons. So 12.5 million metric tons for wheat. On the corn side, 19 million metric tons. To give you a perspective on where that sits relative to pre-war, that would still represent about a 31% decline in wheat exports and a 26% decline in Ukrainian corn exports. So a little bit better at production, but they're using a lot of that production, or they're having trouble getting that product exported. And we still see that decline in exportable supplies out of that region.
So maybe as we move forward, you might see a slow increase into what they're adding into the global market as we progress, deeper into the war and hopefully eventually out of it. But looking at some general economic factors within the U.S., at least the Federal Reserve Bank, it really held its short-term loan rates, keeping it at 5.25 to 5.5 during this month's meeting. But it doesn't feel like necessarily a full positive as we look at what the job market's turning into. So Ben, what's your impression here?
Sure. So I would say that the September report provided both the bulls and the bears within that federal open market committee with something to take away, right? And while the Federal Reserve held that short-term interest rate, they are giving the signal that they're getting close to their end of their hikes. They did signal one more interest rate hike yet this year. There's a couple of things that I think maybe kept them from increasing rates here in September 1. The possible federal government shutdown potentially here's the calendar turns to October. I think that was one thing that maybe kept them from raising interest rates this month. Another one that I think on the other side of the coin that is maybe starting to push people to think about, hey, we gotta do something to control the inflationary pressure is on the oil side. For 2 months now, we've seen oil prices just constantly kind of tick a little higher, and that's starting to trickle into the economy. There's that kind of artificial cliff there that when oil reaches $100 a barrel is when we really start to see consumers start to taper demand, delay travel, and not get out as much to buy groceries and stuff. So we're getting very close to that threshold. And I think that's got people concerned that that's going to continue to slow down the U.S. economy and maybe allow the Federal Reserve to think about cutting interest rates. I don't think those are going to happen for several more months, but certainly that's part of this picture as well.
Well, and thinking about the chain that runs from the Federal Reserve into the impact it has on the ag market, you look at impacts toward the general market, toward the general U.S. economy, impacts to inflation in the dollar, the value of the dollar, and how that bleeds into the trade market. So obviously, still connections there. Ben, as we look through this week, what should farmers and ranchers be paying attention to the rest of the way out?
Yeah, so a couple of unique reports, I guess. So the third quarter hogs and pigs report comes out this Thursday at 2:00. Gives us an idea again of pig numbers, sow numbers out there consuming feed grains. We also have on Friday that ending stocks number for the 2022-23 marketing year for corn and soybeans. That will also provide the first quarter ending stocks for wheats. That's also accompanied with that annual small grain summary. If I can, Will, I just want to say one thing about that small grains report. I would not be surprised if USDA doesn't go back and make a revision on 2022 corn and soybean production, maybe lowering both of those on some smaller stocks. So we can't rule that out. I think that would be my bias. And then next Monday, the September fats and oils and feed grains crush reports, giving us an idea of oilseed crush and ethanol crush.
All right, Ben, it's always a pleasure having you on here. Viewers, listeners, if you'd like to learn more about what we do or about our sister program, the weekly livestock market update, you can go to brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.